Welcome to Ready Set Live. How's everybody doing? Where's everybody coming in from? I'm excited. This is going to be a good one.
Hey, welcome aboard, folks. Who we got out there? We have Nashville, Tennessee. We have Robert is behind enemy lines in People's Republic of California. We have, let's see, who else? Philadelphia. Welcome aboard, Lark. We have Horvath in Hungary. Orlando, Florida in the house. Hello, Brian. We have Taylor, South Carolina. Where on earth is that? We have Deerfield Beach. We have Germany, Dallas, Texas. We have New England. Hey, Rajiv. Good to see you again. Austria. We have Amsterdam, Holland, Austria, Tampa. Man, we got people from all over the place. Chris McLean from Norway. John from London. What part of London is that, I wonder? Man, I got to go back there again. How's everybody doing out there? We've had actually a good few weeks in crypto, and we've seen asset inflation finally.
Yes, we have.
And so Mav has got an interesting topic today. What are you thinking about Bitcoin 20,000?
Well, I think it's sort of the fundamental question that we've been asking over the last 2 and a change years, simply around, was 2017 a fluke, or is it something that is more of a cyclical pattern where we see bear and bull cycles that are sort of indicative of a speculative asset class, sure, but one that is growing, of nascent nature, yes, but one that is maturing and over time is sort of accumulating and getting bigger. So 20K is really this. It's psychological, it's figurative, it's a literal representation of the roadblock that stands in front of us, in terms of being recognized for being more than just this sort of tech boom, bubble and burst kind of thing. Seeing Bitcoin return to 20K, especially before the halving, would send a very strong signal to the larger markets that, hey, we're back and we're here to party. No, I'm kidding. We're here to establish ourselves as a legitimate asset class that will be a potential reflation hedge, a potential inflation hedge, etc. Just an exciting question to ask, and certainly in a smaller time frame, I think that's something that we can start to look at. I would say first place to start is maybe with the charts.
The charts.
The
It's
charts.
funny because there's coming from the equity world, there was two schools of thought. There was the New York school of thought, which is very much technical about, some fundamentals, but basically it was a very technical oriented group of traders out there. And then there's Chicago, who is completely the opposite of that. They are all statistical traders. So they're very much, that's where the center of options and derivatives are. And if you go into some place like the Chicago Board Options Exchange, you will not find one single chart in the entire building, not one, nothing. It's all numbers based. So it's really interesting that two different types. Now, I've tried to be as agnostic as I possibly can about that. I think that you can find edge. You shouldn't shun edge no matter where it is. So yeah, I like to use charts, even though it's a representation of the past. And what we're doing is they're extrapolating into the future. And I love to use statistical analysis too, which basically, if you understand options, it tells you kind of a foreshadowing about how people are positioning themselves going forward. It sets the expected move. It kind of tells you what people are expecting going forward. And it's all out there if you know how to read it. So one of the things that I get from a lot of people is a sense of frustration. I mean, it's every time we do something like this where we interact with people, it's a lot of fun. I mean, and we used to do these things in like GoToWebinar, and it was all very sanitary because you could only interact with the presenter.
There's
And
no
now,
comment section or anything.
well, there was, but it was just between you and the presenter.
Right.
Now it's all chaos and anarchy in the chat rooms. And so it's really interesting to read the comments from people that are in the chat rooms, because what I've sensed over the last couple of years is just this preponderance of, people that are very cynical about anybody that has a different view on the market, specifically the bears.
Mm.
Now, bears tend to be more of the professionals, because there's a saying that, assets take the stairs up and they take the window down, because they typically fall much, much faster, because fear is a great motivator
Mm.
to action. And I would say fear is the number one cause of, or catalyst of price movement that's out there. So I get a lot of people that are just denigrating the bears and saying, well, this is stupid. If it weren't for these stupid bears, the price would just go up unbridled. And that is not the truth, because somebody's got to sell you. Somebody's
Mm.
got to sell you those assets when you want to buy them. Okay. It helps to have a two-sided market. And as we'll talk about in a minute here, when I get to the charts, you really do need the bears. If you want the price to go higher, it's got to go lower first. What you've got to get is too many people on one side of the boat, have the wind, swing the boom over, knock them all overboard, and then you can get the price to go in your direction. So keep that in mind. Is I'm full of these sayings, full of other things too, but I'm full of these things that if you want price to go higher, it's got to go lower first. If you want to
Mm.
go to get ahead, you got to take one step back, two steps forward. And that's very much what I think we're going to be seeing in today's market. So let me, with the editorial section away, now let's go over to the charts. This is Bitcoin versus US dollar. This is on Bitstamp. This is typically the exchange that I used to chart with, just because it's got the longest history out there, which is nice if you're going to do something like this. If you want to go out to a log chart and go out to the monthly log chart, this is really what I'm using, because we can set up a trend line on this dude that really goes for a long, long time, right? So a lot of this, and let's go ahead and stretch that over here. This is what has kept me on the long side. This is what has prevented me from thinking that, look, as long as this trend line stays supported on the log chart, and this is really setting up as more of an ascending triangle or pennant type of symmetrical triangle formation, which ultimately should evacuate this pattern from whence it came. And I also talked about this a couple of weeks ago. We have this sort of notion of this measured move here, measured move. If we take the measured move from here, we end up with something like 160,000 or whatever. So it is possible. And I think that is what some people, I wonder if sometimes some of these numbers that you read around the internet, if whether these numbers are just rectally derived or not. But you can actually use this to make a measured move up to about 160,000. So that's not my prediction, but as long as this log chart maintains this trend, then we're in good shape, right? And so you're going to see these crazy movements and volatility. If we go out to the weekly chart, it seems like there's no trend at all. And that's really, it makes sense if you look at the larger perspective of the monthly chart. Anytime you have a parabolic move like this, you're going to pay for it. You will pay for it. And we've been paying for it for the last 2 years. So let's zoom in now. Let's get rid of the macro stuff. We're off of the log chart. We're down to we're the weekly chart right now. So this to me is very good stuff. This is the notion of stair stepping. We're consolidating, breaking out, retesting that pivot line, breaking out again, consolidating. Former resistance becomes new support. Look at that. Former resistance becomes new support. We break out, we retest it, and bounce above. But don't get complacent. Don't get complacent. And this is where, guys like Schuyler will come up with actual rules and wave counts for these kind of things, and will give accurate of what's going to happen next. I don't necessarily do that. I respect that. I don't necessarily do it that way. What I'm looking for at this point is to box in the price action. This is what I do. Okay, so here we have our decision box. We also have a trend line. This is what I call rule number 3 of price action, is that ascending patterns will eventually break to the downside. What I want to warn you guys about is the formation of a lower high at this point. So we've been making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We had a nice pivot test in the last couple of days. That worked out really nice. But don't fall asleep. Don't just assume that this is going to break out above 10,500. I'd love for that to happen, but let me pull back a little bit here and show you the structure is for that. There, if this does set up as a lower high, it's going to catch a lot of people off guard, and this is going to form a bull trap because there's going to be a lot of people that just assume and just expect. And so all these weak hands buy in up it here, and they have to puke out at great pain. And this is where, you know, I actually put the Wilhelm scream into yesterday's video because I did. I got a sample of the Wilhelm screen and I was like, all the way down here. But that's what happens is when you get the bull trap is that you get the Wilhelm move down here. People are screaming in pain, trying to, they expected it to go higher. They were complacent. And this is where they get dismayed. They feel betrayed and like, oh, it's those damn whales again. Oh, it's those stupid bears, blaming it on the bears and stuff like that. No. Here's the structure. Here's what I want. Here's the bigger picture that I want you guys to understand. Okay. This is a weekly swing. At some point, we do need to print a higher low if we're going to move into a new structure here. This has been a downtrend all through here, lower highs and lower lows. So now we barely just printed a higher high. We do need to, at some point, print a higher low to get that change in polarity, and then followed by a higher high. Remember what I said. If you want the price to go higher, sometimes you have to take 2 steps back or 1 step back to take 2 steps forward. Let's go with 2 steps forward instead of 1 step, right? So keep that in mind. Don't fall asleep on the lower high on the daily chart, right? Let's go back to the daily chart again. That could be a lower high. I don't know whether it is or not, but if it breaks down below 9,500, then it is a lower high. If it breaks and closes below that ascending trend line, then that's also proof of that. And all that is that's the weekly chart saying, I have dominance here. I need a pullback. I need a little bit of a rest. We've had a hell of a move coming off of 6,500 all the way up to 10,500. It's a 4,000 point move. We do need a little bit of structure here. So this is how all the time frames fit together. We're obviously taking a pause in this. I've got some other comments, which I might talk about later in terms of alt season, things like that. By far, the strongest coin that we have out there is Chainlink. So Chainlink is a rock star right now. So even whether or not you want to compare it versus BTC or Chainlink versus the US dollar, which is now in Coinbase. So Chainlink is the rock star, but this is kind of the market that we've seen lately, is that a lot of times these rock stars get pounded down. This one too does need a higher low to set up through that weekly structure. Okay, so that is the charting for now.
Just this is a maybe arbitrary observation, but the 2 times that we've seen $10,000 moves in Bitcoin's history, obviously we're at $10,000 today as of February 18th, and to see it get to 20K by May, we'd have to see that again. The first time was over a 45-day period in 2017 between November and December. I think everyone remembers that. And then the second time was last year between January, where it was at 3,500, and it went almost up to $14,000. And those are 2 very different environments. And yeah, again, like I said, maybe it's arbitrary to see it just as, Bitcoin by its price is actually a very poor denominator of what Bitcoin's actual value is, because Bitcoin's value is more derived from the volume, the on-chain transaction volume, the dominance of the overall market, and all of those are actually really strong right now. Yes, Bitcoin has sort of had a tough beginning of the year as it relates to its dominance. It's lost some of that, starting at about 68%, and now it's down to 62% today. It's never lost this much dominance over a consecutive period of days before. So altcoins are definitely waking up. That's kind of the message. But conversely, the contrarian, I guess, viewpoint on that is that altcoins, or rather Bitcoin's dominance back in 2017, was something in the order of 40% up to, it just broke above 60% in December before altcoins woke back up the latter half of December 2017. So Bitcoin is in a very different position today, being above 60% consistently for pretty much the last year. And it's been Bitcoin's market for so long. Yes, we will see some altcoins sort of waking up, and some standout performances such as Link and Tezos. This is going to be sort of the new norm we see more and more of in 2020, just as more capital gets exposed to the space, and just as we see more and more macro events that sort of precipitate to more and more price action. I think that's sort of where we are. The new normal as it relates to this space is sort of watching what's happening in the larger markets, as well as what's sort of priced in, because for the most part, people know what is priced in over the next couple months. Bitcoin Cash halving, Bitcoin SV halving, Bitcoin halving, Ethereum 2.0 in July. A lot of these events, everybody pretty much knows when they're coming. They've got it marked on their calendar, etc. The futures are already starting to speculate on them. That sort of, those markets are there. But a lot of times it's what we don't know that also moves the market more than we expect. So there's going to be a lot that happens this year. I think that's going to be indicative of that in the price. So, Doc,
One
what's it?
thing that we've
Yeah.
been saying there over the last couple of years is, everybody like that jumped onto 2017. That was so much fun because
Hmm.
everything literally, it was like helium. Everything rose higher,
Yeah.
and it without exception. And I've been through other markets like that before, like especially the late 90s, where anything that had a .com attached to their name, even if they didn't have a product, it rose parabolically. And that was a lot of fun as well too. But what I've noticed over the years, and this is where I'm going to say that, I've noticed this over the years, is that seasons rarely repeat like that. Lightning rarely ever strikes twice in the same spot. So what you'll find is that the season that we had in 2017, I don't think we'll see exactly the same way. I think we're going to have an analog of what's happened in the technology markets over the past, I'd say 10 years or so. Look at what has happened to the technology stock market over the last 10 years. Has everything risen? I mean, right now it's going berserk. We have an equity market that's going berserk, but not everything is going in that manner. Really, it's been the same few big dogs pulling everybody up. Back in the late 90s, everything was going higher. Now it's just a few. And you're going to love this. Actually, a lot of people on the air are calling this the MAGA market, which is Microsoft, Apple, Google, and Amazon. So it conveniently fits right into that
Oh
acronym
man.
there, the MAGA market. So those the market cap of those are so large they are literally pulling everything up in their vacuum. But a lot of tech companies are actually below their 200-day moving average, barely keeping up. So a lot of the averages, it's just being driven by, and the analog here is that I think the same thing will happen to the altcoin market. I think what will happen is, apart from the usual suspects in the top 10, that we've been tracking for the last 10 years. Actually, I think some of the altcoins will outpace some of the large caps that are in the top 10. And I think Chainlink is a good example of something like that, where it's going to be actual revenue. It's going to be actual business cases instead of, this sort of FUD and sort of like, hey, let's talk about, my coin's better than your coin bullshit that we hear in every single one of these, like it just turns into tribalism and religion that goes into this. But actual use case, actual revenue that hits there, this is where we're going to see a very, very different altcoin season. And it's going to be dominated by just a handful, I believe, going forward.
Yeah, and think about the paradigms that have shifted over the last 2 years versus 2017, especially as it relates to this space. It's important for us to have a strong Bitcoin, but I think it's even more important for us to have a strong overall market because that's indicative of an overall healthy space. And some of the trends that we've seen over the last 2 years in terms of maturity of the space, more professionalism, more, I suppose, outbound partnerships and external sort of outreach that has resulted in collaborative or even ventures from top companies, top tech companies, top agencies, whatever. This has resulted in a lot of really positive development, and that sort of gets thrown around a lot. But the point that Doc was just making about the MAGA stocks is, well, understand why those have blown up recently. I mean, yes, it's sort of a meme that, tech has been over the last 20 years just absolutely massive. But the thing is, the digital economy, if, want to call it that, really only contributes about maybe 3%, I think is the statistic, to the global GDP. So it's still very nascent and it's still very, up and coming in its purpose. But what we'll see over the next couple decades is the shift more and more to digital services, where sort of the physical industries of the world sort of support this new growing digital space, digital economy, the internet economy. And central to that is the proliferation of new technologies, data being the new oil. Once we see blockchain better interface and better, to have a better proclivity towards interpreting and storing and securing data, this space is going to definitely go above what it is today, because that helps us be stakeholders in the future. So all of that aside, what Doc is saying is very salient to where we are today. There's going to be a shift again towards altcoins, and it's good. That's a good thing. We've taken the time to really mature the level, the quality of the projects in the space. Still not where I would like them to be in a lot of ways. There's still a lot of questions, but we're definitely past the ICO era, the Wild West. We're definitely still growing, yes, but the caliber of projects and the types of executions and just the different ways we're seeing the use case demonstrated is it's fascinating, and it's going to continue to see that. What I think will also be just absolute fuel to the fire this year is the introduction of more and more leverage available to average traders, and more of these institutional products that will help large institutions securely invest their client funds. So those are both extremely important developments as it relates to just growing up the space, making the market more diverse. Certainly, increasing the price is one offset of that, but also just it's a very large year in terms of the fundamentals on a macro side. There's a lot going on just in terms of geopolitical tensions and trade talks and things of that sort. So there's a lot of confluence of factors right now. Liquidity, liquidity, liquidity. Very good point. Bald guy. Man,
Bald guy. Hey,
you're getting roasted.
I'm Doc. Okay, let's personalize this.
Oh my.
It's yeah, I love the salt. Let's
Yeah.
go for it.
Yeah.
So any questions out there? We don't Mav has come PowerPointless today.
Ah, sorry. I know everybody's so disappointed.
Yeah, it's
Mm.
interesting that Ricky brings up a good point. Like a lot of people, every chat room is always an opportunity to shill your coin or to make your case. And think about this. It's like, can you name any other financial market in the world other than, maybe some third world country where people feel the need to try to sell their chosen asset? The fact that people are personalizing something as and I'm not calling out anybody in the chat right now, but just basically what we're seeing is just the same thing. We see the same thing week after week where people feel the need to like try to sell everybody else and try to influence everybody else as to what to buy. Let the price chart do that for you. The price chart will never lie to you. And really that's all you care about is what's the price chart telling you. The price chart knows everything price forward for the next 6 to 9 months. It's not about today's news. It's about the projections about where this thing is going to be in the next 6 to 9 months, that project. And if there's any revenue in the pipeline, it will know about that. And you'll say, good night. That thing will blast off like a rocket. Right. So anything like that, this is what I've learned over the last years is like I used to do fundamental analysis. I used to pay people to do fundamental analysis for me. Mav, you might remember that,
Mhm.
you know, and and I've stopped doing that because the picture is in the price. It's right there. It's right there. And it's priced forward for you. And it's even in the option chain for you as well, too. So, you know, guys, I don't care what anybody says. The story is right there in the chart. Oh, let's
Oh,
see. D. Tobert, can I say a little about Ledger X? Right now, it's the only platform for options, but I never say much about it. I'm scared about Ledger X. I, I was going to work with Ledger X and help them and I wasn't charging any money for it. I was not going to shill or do any kind of affiliate deal. I just wanted to help bring them to market, and they went dark on me. I don't know why. I don't know why they refused our help to do something with that.
mm.
I um, have an account with them. The spreads are so wide, you could drive a truck through them. You can't negotiate the spread. At least you couldn't the last time I looked at it. Now, the good news is that um, TD Ameritrade has actually picked up on CME options, which is good news and bad news because the CME futures, these are options on futures. The CME futures are 5 Bitcoin. That is a huge notional contract, right? So the options are going to be really large as well too. So this is more of an institutional instrument or for those that have larger accounts. But at least we do now have a couple of vendors that are starting, and it's just going to be slow. And you know, Darabit stepped on their willy and just they finally said KYC, all you Americans get the hell out. We don't want you anymore. So it's like, okay, goodbye. We're going to take our football and go home. Um, but we're also Mav actually wrote an article about what was that FTX?
Yeah, well, yeah, I did the video yesterday about FTX.
Yeah, that's crazy. I mean I can't even keep up with all these vendors. It's like no, the deal with FTX, they don't do KYC, but you cannot just sign up and then you have to do VPN the entire time. You can't do any US IP addresses. They're a little scary as well too, because it's like even the option chain on there, you basically it's almost like an open outcry option chain. It's not like you're trading versus an automated market maker. It's like you're literally begging people to buy and sell options online. Crazy stuff. I mean, we're going to see more and more of this though in 2020. You're going to see much more. You're going to see an explosion of derivatives.
Yes. Yeah, definitely. I think that's sort of part of what's going to drive the markets this year is just more and more diversification in terms of, we're seeing more and more DeFi products, we're seeing more and more future options. The market's just growing up, and that's really good to see. And some people lament that, but you're sort of having a one-dimensional view of it. I think there's more sort of externalities that are going to be built in just from the market exposure to many different products that we can't even quite see yet. But it's important to have that perspective that this is good. This helps the market to be more capable of supporting things like a Bitcoin ETF. Certainly more responsive to working with regulators around the world, so people aren't looking to clamp down on crypto assets, but rather embrace them. This is sort of the dance we have to play, or do. But yes, it's very exciting times for the development and future of cryptocurrency, simply because I think the forces are moving in the right directions this year, and there's a lot happening. If we'll see 20K by May, it's going to be around some major development that happens. What we've seen historically with halvings in the past is that certainly over the course of maybe March and a little bit of April, there's going to be price volatility. But as Stock has made the point, a lot of things get priced in ahead of time. Certainly, the futures and options are already well speculated on what's going to happen.
Well, we have literally 100% efficient markets right now,
Yep.
and maybe that's something that people, again, guys, all of us learn how to invest from TV commercials, or at least here in America, this is what we do. We watch TV commercials from TD Ameritrade and Fidelity and Price Waterhouse and all these other companies, and they just bombard us. They tell us basically what we're supposed to do. We're supposed to find a needle in the haystack and use their broker platform to find that stock that nobody else can possibly find. And it's just all bullshit, right? Because this whole business is built with companies that are spending billions of dollars on research to find out. They're literally sitting in board meetings, understanding what these companies are doing, these analysts, right? So the fact of us retail traders knowing something that nobody else does, that is a crock, right? So once you get past that point, what you have to do is to say, look, I'm never going to be the first one in line. And that's okay. You don't have to be the first one in line to buy into something. Like I said, nobody ever gives you a medal for buying the very bottom tick of a chart. Why, don't be a hero. Get rid of that whole notion. And again, that's very powerful of what we've been fed. You have to get rid of that. You have to reboot yourself. Markets are efficient to the point where everything that is known about that for the next 6 to 9 months is already priced in right now, today. And this is why people can't understand when a piece of good news comes out about a coin or an asset or stock or whatever you have, and all of a sudden it sells off. And like, what the hell is going on here? It's because there's nowhere for it to go. That news was already priced in, and that's when the retail traders buy in and the professionals say, oh, okay, I'm going to fade this. And that's the way it works, guys. Markets are 100% efficient. And so what we have to do is literally just swim with the sharks. Let the big guys, the whales and the sharks, let them lead. We're just going to tag along for a ride. That's all we're going to do. So don't get the sense that you're going to trade based on information or anything like that, because guess what? It's already weeks old by the time that you get it.
Yeah, and one other piece of, I guess, something, a development over the last 2 years that I've sort of noticed, or I used to talk about things like, so in the larger equity markets, an index is, you're just sort of buying the market, or buying a subset of the market as it relates to, a certain sector or whatever. With crypto, I used to talk about how you could potentially do an index, or there's a coin called Crypto 20 that literally is just an index of the top 20 coins, and that sort of diversification through you know uh, basically having a basket of assets when you're in a very volatile speculative space seemed to be the right move, especially back in 2017 when things were bouncing all over the place. But actually, what ended up happening was that Crypto 20 underperformed Bitcoin and underperformed some of the standout winners of the top 20. So you really were doing yourself more of a disservice by holding an index because unfortunately, there's going to be some stinkers that find their way into the top 20 and then just, yeah, they're gone. So in this day and age, I think it's much more effective to sort of look at the weighted average, you know, dominance that some of these top coins hold. Bitcoin, for all intents and purposes, at a 62% market dominance, is an index of the crypto market as far as I'm concerned. Yes, it's a single asset, but it's so dominant of the market. It is so representative of the market. It is such a gatekeeper to crypto in this day and age, both in terms of liquidity of assets, capital coming into the space, as well as just, the flag bearer of what is crypto in 2020. That's just kind of where we are right now. There's been a lot of maturity added to the market over the last 2 years, a lot of introduction of different onboarding ramps and exchanges and products, etc., that have really allowed Bitcoin to get past where it was in 2017, where a major narrative, especially for the first half of 2017, was that there was going to be a flippening. Ethereum was going to overtake Bitcoin, and I haven't heard that argument since 2017 because Bitcoin really was able to consolidate. It was able to, people forked off and did their own things, etc. There's just been a lot that's happened over the last 2 years that has really consolidated the faith around Bitcoin as being, the representation of cryptocurrency. Will that always be the case? Maybe, maybe not, to be determined, but certainly is not the narrative in 2020. So, anyways, I think it's the big takeaways from today is that we will see more price action over the course of 2020. It's going to be a hot year. There's going to be a need for some pullback as things get a little too hot. But overall, we're going to see more and more macro market action, altcoin season, whatever you want to call it, more of this sort of there's going to be standout winners. There's going to be more of just more excitement, more volume in the space than we've seen over the last 2 years, and that's a really good thing because that starts to drive more development and investment in the space, and just seeing crypto wake up again is it's great. So that's a big narrative. Will we see 2020? Sorry, 20K before the halving in May? Unfortunately, probably not likely. But what we will see is some really good consolidation of price. And what has historically happened is the price action comes after the halving, and not all at once, but over the 6 months or 12 months after a halving. That's when we see some real growth in terms of the underlying asset. It's just going to be a very exciting time going into 2021. So, yes, try to temper your expectations, but also try to look forward, try to speculate as to where things are going, because I think they're going to be moving a lot. So, with that, we'll take some questions and then get off the air. But guys, we always appreciate your time and hanging out with us, and just having some fun talking about some magic internet money. It's always great.
I got one from Crypto Darthmark that
Yeah.
he's been asking about the pullback, and let's go through it over to the screen and do the share. Okay, so when I got on the air today, got on the air. Uh, when we started broadcasting today, I went over the fact that watch out for this to be a lower high on Bitcoin versus the US dollar. Right. So don't fall asleep on this being a lower high. And, we drew in the box. We said, okay, here's the price box. And, here's lower high. And if it breaks this trend line, then we may see retracement on the weekly chart, which is a good thing. Okay. So, Darth is saying, well, okay, where would that land? Where would that stop? Well, okay, cue the Wilhelm scream. I mean, we could see it go down to there. Price can do whatever it wants to, but I think it's unlikely. Now that we've hit a higher high, especially on a closing basis, then it improves the probability that we're going to have this weekly swing stick and print a higher low and at least move to the upside from there. So what we can do is we can throw a few things together here. I like using fib retracements to come up with landing spots for these. So let's say if that is the high, then what I want to do is I want to look for confluence. I want to look for confluence for the higher low. Now, confluence means this is where you stack up your probabilities. So let's say, first of all, what I want to look for is I want to look for swing tests here. So there's one here. That's a good one. So 82.52 is that's a good swing test. And that would be around the 61.8 retracement of that. So that's a good level for this to come down. You can also see support coming into play. That swing test support, prior resistance becomes new support, bang, right? It lines up with the 50 or the 61.8% retracement. What I also see is the 38.2 retracement right there. That's a swing test. Former resistance becomes new support. Boom, right there. Almost magic, almost like it was meant to be there. So here are the two levels that I'm looking for. One would be about 9,100. Okay. And that may produce an okay bounce if we get that. So we may get a bounce from 9,100 if it breaks that line. What I'm almost thinking though is that since we've gotten everybody on the bull train now, what we may need to do is we may need to come all the way down to here at 8,200. Can you cue the Wilhelm screen again?
Ah,
Yeah. Can you imagine how freaked out everybody is going to be? Can you imagine all the negative articles that are going to be over here? Like everybody's going to say, we're heading lower again to 3,000, right? So, you know, all of the bears are going to be all excited, but this would be a great place for this to bounce because we would have so much negativity into the market. And those that understand, those that are with deeper wallets than me that are looking for a value entry that don't want to chase it up here and they're looking for a value entry, I would consider to be 8,200 a pretty good value entry. That to me that's the level that I would look for at this point. So it could bounce to 9,100 if it breaks through this, but I'd almost rather see this go down to 8,200 and inflict some pain and then bounce, because then we will get one hell of a reaction off of there. And you'll see this is that one step back, two steps forward kind of thing. This should bring it up to at least 14,000. All right.
ah,
So let's pump
Doc,
it out of here.
Doc, you did it again. You crashed the market.
Oh, look at that. Wow.
Why does this always happen on our streams?
Look at that. We are dying. It's not like I called it, guys. I'm not trying. I'm trying to be a team player here, dude.
Well, I guess we can't say, or yeah, we kind of man, this is too funny. Yeah. Sorry. Oh wow. Yeah. Well, that's welcome to crypto, where it can change that fast. Because Doc says it does.
Soma, what do I think about CME gaps? I don't know that they're necessarily all that big of a deal. I mean, some people may have found a correlation between the gaps, and The thing is that they can get punished. I mean, if the guys that are holding long over the weekend, long or short over the weekend, that are playing the CME, they have no way to trade over the weekend, which is just stupid. I don't know why they built a product that cannot trade 24/7. It just makes no sense. That's why the CBOE futures went out of business, because no volume on them. Why would you do that? So I wonder what the, I wonder if we're going to hit the fib like right now. Yeah, let's see what.
Yeah, let's do
Okay,
this
so
in real time.
yeah, we'll do it in real time. We'll do it live. We'll do it live. So we're almost at the 38.2 fib. We're almost at the 38.2 fib.
Oh my.
Let's see. Let's do a little share here for just a minute, and then we'll leave you guys
Yeah,
alone.
we gotta take a break on the market. We're crashing it too fast.
So yeah, so there's your lower high. This is one thing I say in Omnia to our Omnia customers all the time, is that the lower high is the nastiest signal in technical analysis, because nobody sees it coming. Nobody sees it coming. Everybody is all complacent. Everybody's thinking, "Oh, here we go. It's just another dip to buy." And they don't realize that they, like, why didn't you buy here? Or why didn't you buy here? Or why didn't you buy here? Because it didn't feel good. It didn't feel good. It's like, oh, that's no, I don't know. I don't know about this one. I don't know about this one. Oh, this one doesn't feel good. And now this one feels good. This is where all the weak hands get on board and they get taken out. So right now, if you're a weak hand, don't be surprised if you're underwater on some of these trades. Right. So always try to get the first one out of the reversal. Give yourself a strong hand so that you can deal with the pullbacks on there. So we're not going to sit here all night and wait for 9100 to show up, but I'd say there should be some type of reaction at about 91 to 9200. That wouldn't surprise me. And don't forget to wait on the close of this. The close is more important than the actual wick of this candlestick. If it's able to close above this trend line, then no harm, no foul. Okay. Yeah, that was a quick move. All right, so I'm going to quit sharing. We'll go back to, we'll do it live. We'll do it live.
Yeah. Well, I think this is confirmation that whoever was talking about the golden cross yesterday clearly doesn't understand what they're talking about.
Yeah, we had a golden cross yesterday, but golden cross is irrelevant.
Yeah.
It's more of just a marketing thing, because you can go back and find all these golden crosses and they get uncrossed, and it's just, I've studied golden crosses. We're getting a pretty good reaction off of 9300 right now. We'll see whether or not this may have just been a news event that
Yeah,
somebody overreacted to.
I'm looking. It's Chad, if you know what's what's going on. Maybe it is just Doc.
It is me. I can't, my secret's been revealed. Okay, I think we're just about out of time here, so I want to thank everybody for hanging out with us.
We've done enough pain for today.
Watching the dump in the market again. But watch those fib levels at 9100 and also 8200. So those are the key levels to watch for if we do break this on a daily basis.
Yeah.
Time to go long? No, wait. Let the trade come to you, guys. Let the trade come to you. Never, ever chase after something like that.
Doc,
all the people right now are in pain are because they chased after it.
Do you think some of your signals will catch some buy points if we continue to stay at this level?
A lot of signals have fired sell over the last couple of days. So we've fired a lot of sell signals and protected profits. And so we're simply waiting for the next buy signal on the trend trading strategy. So we added trend trading strategy, which is more of a longer term, very simple, very mechanical strategy. If you join us now, we're going to be adding a lot more strategies going forward. So I'm digging into the R&D and doing a lot of woodshedding lately. and adding a lot. We're going to be adding a lot of signals going forward on this. So our focus the last couple of years has been more education of like, hey, this is what a moving average is. This is what support and resistance is. And people are like, hey, that's all cool, but like, why don't you show me what signals I should be taking? And that's what we've been doing lately. So that will be our focus going forward in 2020.
Yeah, I think it's the right time, right? I don't know. I'm excited to see what we can do because we've been, you know, it's been a tennis match for the last couple weeks, just around 10,000. So I think we'll eventually see a breakout of some kind, and when we do, that'll be a fun opportunity. But yeah, I think it's we're definitely going to see more of this heading up to the halving. This is sort of that's the big narrative right now. So yeah, like I said yesterday's video, we'll see Bitcoin Cash and Bitcoin SV having about a month prior to the BTC having. So yeah, just lots of interesting things going on right now, guys. But
Yeah, it's time to go out to Twitter and monitor BitMEX Rect
oh my, yeah, that's
for entertainment.
right.
Hey, thanks everybody for hanging out with us today.
Yep. Cheers, guys.
See you guys next week.
Yeah, thanks for hanging out, and yeah, hope you guys are doing well, and just continue to get excited about where crypto's going and what's happening, because a market that's moving is still exciting, even if it's going down. That's there's still opportunities to make money. So as always, guys, appreciate your time, appreciate you supporting the channel. Yeah, just have a good one. We'll talk soon. Cheers, guys.
Okay.
Bye.
Cheerio.